re-record once we start.
Yeah, it is actually live, though, so no
Oh,
problem.
it's okay. Okay, right. Yeah.
Live, no problem.
Okay.
Now it is, you can see live. It means it's going. No problem.
Okay. So let's look at the essential finance. Personal finance. We are going to talk about the basic, essential, mandatory finance. Three aspects. One is your emergency fund, to the extent of 6 to 9 months of your monthly expenses. You should have it in liquid cash in savings or FD or mutual fund, where within 1 or 2 days you should be able to take it out. So that's most important. The second one is life insurance, to the extent of 10 to 20 times of your yearly income or your yearly expenses minimum. Then medical insurance to the extent of 10 lakhs per year, and then on top of that you can also have top up plans up to whatever the extent, 20 lakhs, 50 lakhs, or 1 crore. So the top up plans are much more cheaper, but the basic plan is a little bit costlier. But all these three things are very, very essential for your financial planning, for your family and for your individual. So any questions on this?
Difference between a life insurance and medical insurance.
Right. So life insurances, this is, it insures your life in case something happens to your life, in the sense you die, then whatever the amount assured will be paid to your dependents or nominees, right? So this is about your life. So as long as you are living, you have to pay the premium, and then there are different kinds of premium. But as long as you live, you don't get anything. But when you die, you get that amount, whatever the assured or maturity amount. Medical insurances, you pay premium every year, right? To make sure that if any medical emergency or any medical condition for you, you get admitted in the hospital, whatever the expenses, with limitations, with conditions and terms and conditions, for those medical expenses, the medical insurance company will pay for you, right? This is for the medical condition. So is that clear, Pandya?
Yes, yes.
Okay. Right. So moving on, the regular personal finance. So there are two things here. One is savings, another is investment. Savings is your regular savings, where you get a return to the extent of regular interest, right? So it can be savings account, fixed deposit, recurring deposit, or post office products, NPS, National Pension Scheme, PPF. So these are all the savings scheme where the amount of return is relatively standard. It can be anywhere from 3 to 7%, but the risk is relatively less, in the sense your capital is protected to the maximum extent. Whereas the investments, there can be risk factor involved in it, where the return can be more, the risk also can be more. So there is investment can be in your real estate, it can be in bonds, it can be in stocks, mutual funds, gold, and exchange traded funds. It is ETF, not EFT. Exchange traded funds. So these are all various investments where the possibility of return is more, with relatively the risk also is more in that. So this is another important aspect after your basic essential three components, which is basically your emergency fund, life insurance, and medical insurance. The next step is having your savings and investments in place. So any questions on this?
Shall I move to the next?
Yeah.
Yes.
So there are specialized personal finance where people do trading in stocks and futures and options, commodities, currencies, real estate. Also, they buy and do some value add and sell it. So these are all some other things where again the returns are more, and the risk involved and the kind of knowledge and amount of work involved is more. And people also do social media related things like YouTube channels, where they earn, and also digital products where you can design various products and earn through these sites, Teespring, Ebates, where you can refer the people for buying, Amazon, Redbubble, Udemy.com, where you can put your courses. If you have some subject where you are good at, you can put up a course there. And then people also buy arts and artifacts and sell it, and royalty through books, movies, music, where you produce these things and you get royalty on a regular depending upon how it is sold. So these are all further things you can do. This is in addition to whatever the your regular work you are doing, your regular job you are doing. So the whole personal finance can be divided into three. One is the essential personal finance. Second is the regular personal finance. Third is the specialized personal finance. All these three things you can do in addition to your regular job or business or entrepreneurship, whatever you are doing. So any questions so far?
Yes.
Yeah,
Yeah.
one question, sir.
Yes.
Yeah, put the currency is cryptocurrency or anything is legal in India?
Yes. Yes. I think it is a limited options of currency. It has to be against INR, but in the international markets, it can be against any currency to any currency. But in India, I think it is allowed like USD INR, GBP INR, like that, JPY INR.
Okay.
Sir, I have a question.
Yeah.
So you have put social media on the same line as trading and arts and artifacts and royalty. Could I ask why and how?
Social media. Okay, social media is relatively new one, right? So it is not that everybody is aware of it or able to do it. So I just kept that as the specialized personal finance. So it can be for somebody else, it can be regular actually.
Okay, because trading there's a definite exchange of money. Even arts and artifacts there's a definite exchange of money. But social media, how do you say you would have kept it as regular? As in, I just want to understand a little more.
Okay, through social media, you can earn money. That is my point. Okay. So here, how do you earn money? By producing high quality YouTube videos. You upload and more people view that, you get paid, right? So it is not exactly same as trading or arts or royalty, but I'm only saying that that is another way of getting the income, right? So similarly, in the digital products like Teespring and Teespring.com, where you design certain designs, arts or design, those things they print it in a coffee mug or T-shirt, and then they sell it. Whatever the profit comes, they share part of it with you. So ebates.com, for example, you can refer various products to various people. If they buy based on your referral, then you get some money, right? So like that. And Udemy, of course, depending upon your expertise in which area, which subject, you can produce video and then put up there, and whatever income they get, they share it partly. So this is purely what I'm saying is this is a new way of earning income. That's what I'm saying. This is, you don't need to put your full time. This is, you do your regular job in addition to earn the income through the social media. The other ones are trading, other ones are buying and selling and writing books and movies, music. So these are all the various ways of earning money.
I think even one more blog writing also people do.
Blog
Apart
writing,
from
yes,
putting
exactly.
videos, they I know many
Yes.
people who are cookery shows. They get a lot of.
Exactly. So my list is not exhaustive. It is only indicative. You can add more, obviously.
Shall I move to the next slide?
Yeah. Let's. Any other questions, Rachna? Is that clear?
Yes, sir.
Okay.
Yeah.
Right. Okay, so now let's understand a little bit about personal finance. What is an asset? So Robert Kiyosaki made the whole finance in a very, very simple way, very nice way. I think if some of you might have read Rich Dad Poor Dad and many other books he has written. And Rich Dad Poor Dad is a very, very famous book which made revolutionary thing in finance. So the way Robert Kiyosaki explains is that an asset puts money in your pocket, a liability takes money out of your pocket. So that's the definition of asset and liability. So for example, if you have a house you are living, is it an asset or liability as per this definition?
It's a
By
liability.
default, yeah, by default we think it is a asset, but as per this definition it is liability. Why? Because you have to spend money to maintain your house, right? You are not earning money. The same house, if you have lend it for rent, you have given it for rent, then you get money. Then the same thing can be treated as asset. So that it is simple and straightforward. So that's how it is looked at. So anything what you own, you can define whether it is asset or liability by the way of whether it generates any money or not. If it generates money, then it is asset. If it takes away money, then it is liability. Then it can be something can be neutral. It neither takes money nor generates money. It can be somewhere in the neutral, but it can go either way, right? So rich people acquire assets. The poor and middle class acquire liabilities that they think are assets. That's the real, irony. The typical middle class people, they think they're acquiring asset, but typically they acquire the liabilities because they buy once and keep spending more on that. So whereas the real people with a rich mindset, they buy the asset which generates income on a regular basis. So this is something we have to keep in mind. The rich focuses on their asset columns while everyone else focuses on their income statements. So again, the typical working middle class people, they look at what is the income. Whereas, because income means you have to keep working, right? If you don't work, you don't get income, the typical income. Whereas the rich people, they look at buy asset and leave it. Even if they relax, if they are on holidays, if they sleep, the asset generates money. It generates income for them. Think of it this way. Once a dollar goes into your asset column, it becomes your employee. The best thing about money is that it works 24 hours a day and can work for generations. So that's the importance of acquiring the right asset which keeps generating more and more returns. Normally, the typical working class forget about this, but they keep working more and more and buy things which are more like liabilities than assets and keep paying for that. Yeah, move on. Okay, so this is something very important to understand. So Robert Kiyosaki explains how the poor, middle class, and rich people behave in handling the money. So the top one is income and expense statement, and below is asset and liability statement. These two are very, very critical in understanding the finance very well. So basically, income says what is your income and what is your expense. Let's say monthly. Keep it simple, monthly. Every month, what is your income? Every month, what is your expense? And asset and liability is what is your total assets and what is your total liabilities, right? So what happens to poor people is they earn the income and then they spend it. That's it. They don't acquire any real assets. So then lifelong, they have to keep working and spending, keep working and spending. So that's the poor class mindset. The middle class mindset is worse than poor class, where they generate income, they earn income, and then they go and acquire liability instead of assets, right? So whether it is home loan, car loan, credit card debt, school loans, or whatever the possible loans, even the home appliances they buy in loan and all those things, right? So the moment you acquire liabilities, your regular expenses and the payment for all these liabilities becoming more and more. So then again, you get stuck with your job or whatever it is, you have to lifelong keep working on, right? The rich people, it is exactly the opposite. They don't go and keep working. Instead, they focus on the asset, acquire more asset. The asset generates the income, and that income is more than sufficient for taking care of their expenses. Plus, they acquire more assets. So this is the big difference among poor, middle class, and rich people. Typically, not everyone is like this, but it is a illustration of how the mindset of different classes of people. It's very important to understand this. Any questions on this, please?
Yeah.
Yeah.
If you're buying more than one house, and that house becomes a liability, right?
No, if the house you bought, the second house you bought, is going to be rented and it generates income, then it is an asset.
Yeah, generate
If there
generate income more than the fixed deposit interest. Then it is
more than your expense. See, when to maintain the house, you also spend something, right? So it should
Yeah.
generate sufficient income to take care of all those expenses related to that asset. Yeah. See, if you are bought on loan and you are paying EMI, so that EMI plus any other property tax, any other maintenance, all those things put together, it should generate more than that. Otherwise, it is a liability.
Yes, it is a liability.
Yeah, you're right. Yeah. Just because it generates rental income doesn't mean that it is asset. It has to generate more than your expenses for that.
More than the
yeah. Right.
What about gold? It's an asset, no?
Yes, gold is
after property. You can buy gold.
Again, gold is a good investment, no doubt on that, right? But can you say it is an asset? It's questionable. It is not an asset. Does it give you periodic income? It is a good investment. See, what is the difference between asset and investment? Ultimately, you may invest in asset. So as per the definition we saw, the asset should generate income. See, the assets typically it does two things. One is it generates
gold. Gold where you will categorize.
Yeah, I will come to that. So in any asset, it will do two things. One, it will keep increasing on value, right? You buy it at a particular value X, and whenever you want to sell, it sells at Y, which is greater than X, right? So that is one importance of asset. Second importance is it should periodically generate income, right? In gold, do you have both or one?
One.
Yeah, only one. So
because but when you sell it is like lot when the rates are very good, like from 34 it went to 50. So that time if you sell it, they must have.
Correct. So that is why it is called investment. Investment. So you have to sell it at the right time.
Yeah.
So there it requires a lot more understanding, a lot more knowledge, a lot more experience, right? Otherwise, so you bought the gold and suddenly you have the need, and that time gold has gone down. Then you sell it for loss, right? So that's not going to be asset, right? So it also depends on how do you deal with the asset. You are able to use it appropriately.
Shall I go to the next slide?
Did you get the 1 minute? Did you get the clarity, Anita?
Yes.
Okay, yeah. Any other questions? Yes, Fatiha, you have any question?
No, just listening. It's maybe at the end. Yeah.
Okay, sure.
Yeah, I have a question.
Yeah.
credit card, use of credit card.
Yeah.
We should completely avoid using credit card, or what is
No.
your view?
No, you should not avoid credit card. You should use credit card wisely. So you should use credit card for two reasons. One, it improves your credit score, right? You should use it. It is like loan. You are getting the loan and paying on time. So as long as you are utilizing your credit card and pay the credit card bills on time, it improves your credit score. That is one reason. Second reason, if you are wisely using it, instead of putting up your money upfront, you are spending from credit and then paying it on time. So you are saving to a certain extent little bit, right? Instead of paying your own cash and then losing interest on that. It's hardly any amount, but it is still worth it. So for these two reasons, you should use credit card, but only in a very, very balanced and disciplined way.
Do you
Excuse me.
Okay, yeah, please.
Go ahead, Kumar.
Yeah, one question. Do you advise taking loans?
See, loans, yeah, if you can avoid, it's good, but you cannot always avoid, but you should wisely take the loans. In fact, the rich people, they operate on credit only. They know how to take the loan in low interest rate and generate high income. So that is the right way of utilizing the loan. But what happens, the typical middle class, they take unnecessarily loan and keep paying EMI throughout their life. That is not good. It should be avoided. So what will you do with the loan is important. See, the thumb rule is, when you get the loan, that loan should generate more income than the interest you pay. That is the right way of utilizing the loan. Otherwise, it is not.
Yeah, I made a mistake of taking loan to buy a home, but the rental and other things are below the loan interest.
Yeah, that's unfortunate.
I made a bad decision. That is what I felt.
Yeah, it happens. It happens.
One of the bad decisions. Yeah.
But sometimes if you have bought in the right location, the value can increase. It can tremendously increase. It can multiply. So in that case, it may be okay. But
yeah,
then again,
some of them are fruitful, and one of my where I gone wrong.
Yeah. So what happens is, we don't put sufficient thought in all these things. Typical working class people, they just blindly go and buy it, just because some friends bought, some other suggestion came, without looking at what is the long-term business value of that asset.
Okay, sir. Yeah.
Yes, Fatia.
Yeah, you said using the credit card wisely. What is the, I don't know if this is the right, the percentage of spending on a monthly to be on the safe side? Wisely, to be wise in spending on your credit card.
There is no universal rule or any such thing. As long as, even if you all your spending, you are using it only through credit card, as long as you make sure you pay it on time, don't let it overdue and pay the interest on that, then it's okay.
Yeah, but sometimes maybe say you spend in a month, you have up to 20,000, say, okay, on your credit card, and then you spend the 20,000, okay, and then you have to return that money, maybe, and you had some serious life circumstances that you're not able to pay that 20,000 on time. Yeah, so
exactly.
yeah, so I say,
so that's not good. That's not good.
Yes.
See, that is where you need to have a little bit planning.
Yeah.
Okay, so to the extent, whatever, let's say for the whole month, you are paying 20,000, you are using 20,000 dirhams from the credit card. That 20,000 dirhams should be there in your bank account already. So instead of spending from your bank account, you are spending from credit card, and end of the month you pay that 20,000 credit card bill.
Mhm.
So that is
So
how
you're
it should be.
saying you have to go within your budget. You
Your
don't
budget,
exceed in order.
exactly.
Yes, yeah. Mhm. Yeah.
Exactly, you said it. Yeah.
Mhm.
So whatever
Okay,
the
thank you.
spending you have, it has to be within your budget and it should be
Mhm.
there in your bank account. So instead of
Yeah,
taking
okay.
the money from bank and paying it, you are paying through credit card, and at the end of the month, you pay from the bank account to the credit card bill. That's
Okay,
the right way.
great. Thank you.
Right. Okay, so the other one is, again, Robert Kiyosaki explains in his cash flow quadrant book. There are three kinds of people. Majority fall in employee. E is employee. S is self-employed, or their own not entrepreneur, their own business. They do it independently, more like consulting. And B is business. I is investment. So the employees, that is a majority in the world, they look for security. I'm looking for a safe, secured job with good pay and excellent benefits. So that is what the employee's mindset. But what happens is they behave more like a middle class employee, where they get the income from the job and then they go and acquire liabilities and increase their expenses. So they don't acquire the assets. So that is the typical way the employees behave. And the other one is self-employed. So here the freedom is a little bit more. If you want something done right, do it yourself. Instead of working in a big organization, they are experts, they do on their own. It can be a doctor, lawyer having their own business, or IT expert having their own consulting, whatever, the freelancers, independent professionals, and small business owners. So they are in S quadrant, but they are not much different from employees. They are also in the same similar things. So there is a little bit of independence. Then business is the way of wealth building. I'm looking for the best people to join my team and work for me and generate more profit for me, right? So that is the business. That is where the real money comes, real wealth comes. Then investment. Investment is financial freedom. What's my return on investment? So here the money works for money to generate money. So 95% of the population is either working for others as employees or self-employed. Again, the employees and self-employed, they own only 5% of the wealth of the whole world. The 95% of the wealth is owned by the business and investors. But the people who are in business and investment are only 5% of population. So the employees look for security, the self-employed look for independence, the business people look for wealth building, and the investor looks for financial freedom. These are the 4 types of people across. So you know where you fit in and where you need to go.
So, sir, I have a question here. If you go back to the previous slide, now how long would it take someone if they wanted to move quadrants, say, from the left-hand side to the right-hand side? What kind of investments and what kind? I know, of course, you spoke about them, but what sort of should be your chart? Should you start low risk or should you go high risk? How do you move from?
Right. The typical path is from employee to self-employed, from self-employed to business to investor. That is a typical path. But sometimes it can be employee to investor, self-employed to investor, or through business. So that is the way. So
So, sir, if you say, you start trading or you start investing in stocks, etc., and they start making money for you, would you call that an investment, or would you call that something like a temporary short-term gain? Or How do you
So
classify
that
that?
initial thing is only short term, but you can
Right.
move to investment if you are an employee. If you want to move as an investor, that is possible, but it requires really lot of knowledge, discipline, and support, and the sufficient capital.
Right.
You can move from employee to investor. That is possible.
Right. Right. So,
So if you have sufficient capital and you go and invest in the right instruments and multiply your money, then yes, you become an investor. But what happens to the typical employees is that they go and acquire some assets which doesn't generate sufficient return. Either they lose the money in the investment or they just struggle to keep the capital. Right? So it requires the mindset of investor, knowledge, lot of knowledge, and discipline, more importantly, discipline, and required support from various other people. So all these are very important in addition to capital itself. So
got it.
it is possible, but then you have to be approaching it in a structured way.
All right. So, yeah.
All right. Okay. So moving on to the next slide. Okay, so this is another way of looking at it. The employees, they put 100% of their time and only one job, and that is equal to income. 100% of your time into one, that is your income. So you have a job, your time equal to money. Okay, no leverage. So it is equal, say no linear equation. You put your time, you get money. No, one time the money. In self-employed, you own a job, so you can decide your flexibility. You can set up, what is your timing. So again, here also time equal to money, but then you can demand more, depending upon your expertise. You can charge more. It is a little bit more money, but it is similar to employment. But you have the flexibility and independence. And here also no leverage. In business, you put your 1% of your time, not 100% of your time. You put 1% of your time, and then 100% of people's time. So you recruit people, and whatever the profit comes, you share part of 1% of the profit to them. Remaining income is for you. So you own a system, and people work for you. So here, more people you employ, and you generate more income and more profit. So here there is a leverage. What is the leverage? Other people's time and expertise. So you recruit other people's time and expertise and utilize their time and effort in your business model and generate more profit. And you keep 99% of the profit with you, and 1% you share with the people whom you recruited. In the investor, money works for you. So you put the capital, that capital generates more capital. So income not dependent on your presence. It depends on the money. But then again, here the knowledge, experience, discipline is very important. Right? Any questions on this? Okay, move on. Right. So there are many asset classes. So this is only indicative. You can find more and more. So you can own a business. You can start your own business. So when you start the business, you should set up your system. You should set up a business model which generates good revenue and profit for you. Many people, really set up the business and really they earn a lot of money. So that is a good thing. Real estate, again, here there are many people who really earn money in real estate, where you buy and add value to the real estate and then sell it for profit. or you rent it out, or you keep it for some time and then sell it. So whatever the way it is. So fixed income is a debt fund where you invest in fixed income instruments. You can own the cash. You can invest in equity or stocks. You can invest in mutual funds. You can invest in derivatives, which is futures and options, which are more risky, but returns are more. You can invest in hedge funds, commodities, gold, arts, artifacts, antiques and rare items, intellectual properties, social media, digital currency like cryptocurrency. So these are all the various possibilities. So when you own the cash, the return on the cash is very less. So that is the diagram, the expected risk and expected return. Fixed interest, like your FD, RD, or other such bond, those kind of things. The return is low, the risk is low. You can own the property or the real estate. The risk is a little bit more, the return is more. Alternative investments like whatever the mutual funds, derivatives, there the return is more and return is also more. And then shares. So like that. So there are various asset classes. But to handle each asset class, it requires that kind of knowledge, experience, discipline, support. So it doesn't come just within one day. You have to spend sufficient time to acquire right knowledge and experience and follow the discipline and regularly review the whole thing. Any questions here?
Yes, please.
Yeah.
About investing in gold. Yeah. You mean not the regular gold that we're wearing, the coins, okay?
Yeah.
So,
So
yeah.
gold, there are two things one can do with the gold. One, if you are going for the physical gold, you can buy up to the extent of the jewelry, whatever the gold you want to wear and use it. You can buy the physical gold to that extent. But if you are wanting to buy gold for the investment, it may not be a great idea to buy as the physical gold. Instead, you can buy as the gold ETF, exchange traded fund. So you can buy the digital gold. That is the right thing for the investment.
What do you mean
Whatever
digital gold?
Yeah, whatever you want to wear and use as jewelry, buy physical gold. But investment purpose, buy the digital gold. Is that clear?
Yes, yeah. Thank you.
Right. So moving on. Okay, so there are multiple types of income possible for each one of us. We should go for multiple types of income, not just one, what we call it as earned income, which is you put your effort and time, then you get money. That is a typical working or earned income. So here you put your effort and time and your expertise. The interest income is where you put your money or asset and earn on that. The typical one is use FD, bonds, post office products, debentures. That is interest income. Rental income is based on your real estate. You rent out your real estate or the equipments. That is the rental income. For example, many people, they buy the aircraft and rent it out. So most of the airlines, they do not own the aircraft. The aircraft is owned by somebody else, some individual or corporate, and they rent it out. So you can rent out the equipments. It can be the industrial equipments or the other equipments. Profit income. So you can use your skills and products and services like what we talked about, designing digital products and the earning from that. Or you can buy and sell equity, commodity, derivatives. So that is where you get the profit. So that is a profit income. This you can do in addition to your regular working as well, or owning the business. So the next one is business. Business is the most important profit income thing. So you use employees, you use loan, equity, commodity, derivative, all these things are used for profit income through business. And then royalty income, use your skills and time and get your royalty. Capital income, so here in your real estate and equity, you buy, and then when the value goes up, you sell it, and then that is the capital gain. So you pay some money on that. And dividend income, again, you own the equity and the mutual funds or real estate soft digital form, you get the dividend on those things. So these are all the various types of income, and what is the asset class used, and what is the typical tax. See, more and more passive income, your tax is less. The active income, your tax is more. So this table gives you all these details. Any questions on this table?
No, thanks.
Is that
It's clear? Yes, yeah, it's clear.
Okay, good. So you look at how many, what is, just go back once more point here. So look at what are the types of incomes you have and see where you can really increase your income in addition to your current income. Currently, you may be having earned income and the interest income. Can you also increase your profit income or royalty income or capital gain income or the dividend income, right? So look at that and then accordingly work it out. So, so any questions, RB?
No, sir, not yet. I'm just trying to put it all in, especially the difference in the taxes for active and passive income. I haven't thought of it that way ever. So yeah.
That's what Robert Kiyosaki explains.
Yeah.
That more you work, the tax is more. Less you work, the tax is less.
Tax is less, yeah. Should find ways to work less now.
Yeah.
And I have one doubt, royalty income. For example, you put like skills. Okay, I have a skill of drawing and painting something. So how I can make it into a royalty income?
Okay, royalty income is typically from, let's say you write a book, as and when the number of copies sell, you get the royalty on that. Or you direct music videos or movies or any art project, okay, which people consume that, at that time you get the royalty income. So with your art skills, you have to find out what are the things you can do, which you produce something and give it in the with the people for consuming, and as and when they consume more or buy it more, you get part of that money. So typically it is books, music, movies, but nowadays with the digital media, there are more and more forms coming up. Yeah.
Shall I go with the next slide, sir?
Yeah. Okay, so these three financial statements are very, very important. This is typically used in the corporates, and we can also use it for us individually, personal finance. So this is something I would really suggest each one of you start working on these statements. Very simple. I will explain how to do it. And I want you to get started and start doing it. And I want you to really ask questions, take the help. And if possibly, I would like to review each one of you individually if you can. Right? First one is income and expense, or it is also called profit and loss. So here, basically, the simple way of getting this statement is you go and get your all. See, nowadays with a lot of focus on digital, so all your expenses and incomes are there in the bank account only, right? Either bank account or your credit card. These are the only two things, right? You may have multiple bank accounts. It doesn't matter. So now that you have your internet banking and the mobile banking, you can get whatever you want. So basically, my suggestion is, you all know Excel sheet also. So go and download your bank statement and credit card statement in Excel format. right? Now the the March end is coming. Let's say tomorrow, day after tomorrow, you download for March. Not only March, you can download for January, February, March, or last 6 months. Last 6 months statement you download, put it in XLS, and then you can add more columns. You can classify whether it is a income or expense, and what kind of income, what kind of expense, and for what purpose you utilize. So like that, you can put more columns and add to that, and then you can analyze what is your total income, what is your total expense, and what is the difference between those two for a given month or quarter or whatever you can decide. And then what are the various types of income? Types of income is relatively easier. You either got the income your work, or you got income through dividend, or income through real estate, whatever that you can classify those incomes. And then you can classify the expenses, whether the expenses for your premium payments for your insurances, whether it is education related, whether it is your regular food related expense or vehicle related expense. So you can define, you can classify whatever it is. So similarly, you can download your credit card credit card statement. So bank statement and credit card statement, and classify your income and expense. So is that clear? Is it something you can do it? This will give you on a month-on-month basis how much is the income, what kind of income, how much is the expense, and what kind of expenses. Then you can review, is there any control required, is there any fine-tuning required in reducing the expenses or increasing the incomes. So this will really give you a lot of insight. So it is very simple to do. Just download from your bank account, internet banking, download from your credit card, put it in XLS, and do pivot tables, use pivot tables, and do simple analysis, right?
So I just want to ask, am I using any apps to track finances?
Yes, you can do app also, but my preferred way is Excel, because there you have a lot more freedom and flexibility to analyze what you want to analyze. And definitely there are apps, and the right person to talk about the apps is Pandya.
Do recommend Pandya?
Yeah, I can. I will screen share. Shall I share my screen, sir?
Yes, please go ahead.
Right. So you see, I'm using for you can see Money Manager. Okay, this is the app for a person. So actually, I'm doing this every, if you see, this is the month. Okay, each and every month, what is my income and what is my expense. Okay, and if you can see the graph also, you can see the graph. You can see this, no? So what I am doing, online class, I have, what is my salary, and this is my income statement, and this is my expense. Okay, where and all I have expense: food, loan, rent, house, online classes, and family, transport. Okay, I given something to them. Okay, in this way you can able to trace it. Okay, so this is what I am actually doing. The app name is, it's very easy to use it. The app name is Money Manager. You can see app name is Money Manager with some big symbol in there. And for savings, I am using this savings goal. Okay. You can see savings goal. Okay. Every time I want to, sorry, this is my goal. So 28,000 every year I have to do. So remaining 17,000 I have to do. So until now I saved 10,000 rupees. Okay. So this is 6 months, 25 days to go. So weekly I have to spend 573 rupees. Monthly I have to spend 2,400 rupees. So when I see this every day or every month, I will calculate my savings. How I want to do, how should I get the money? So this is the way I will plan for savings. You understood? No, you will heard that daily habit. Someone you can see daily habit is I will save 100 rupees every day. See, if I do 100 days every day, then my goal is being achieved. So only 82 only it is required. But if you save daily 100 rupees, my goal is achieved. Similarly, I will track my savings through this particular app. So this is my mom and dad medical expenses. So this way I'm doing. And if you want to know about your what to say, you know about your investment SIP calculation. Okay, there is another app is there, SIP planner. Okay, you can see SIP planner. Here there is lots and lots of calculation is there. So how much you have to do your loan calculations, SIP calculator. So monthly I will invest 5,000 rupees. Okay, the return will be, it's like 7%. Then investment period for 10 years. So what is the calculate? If you calculate, this is your amount. Okay, this is your maturity amount. So this is the chart. There are so many chart will be there. See, this much you will 86. Your investment is 6 lakhs, but your return is extra 2.7 lakhs. So this way you can calculate. Then after you can invest. So no, this is the chart. What you're doing. What it will be. This three I am using. For investment calculation, if anyone for and so the goal, savings goal, money management, and this app is nothing but SIP planner. That's it.
Got it, Pandya. Your voice is breaking in between.
I think he left.
Yeah, I think he got dropped.
Maybe we can go back to your presentation.
Yeah. Let me get the presentation. Right. So we were talking about incomes and expenses. So my real suggestion is for you to download the bank accounts and credit card accounts every month and put it in an XLS and add more columns and do analysis and review that on a regular basis. So similarly, assets and liabilities, this is also called balance sheet. This you can put it in your, this is not a big deal. First time you do it, after that, maybe, once in a quarter you can review, where you list out all your assets. One sec.
Happened.
Yeah, Pandya.
Everyone is there. Okay.
Yeah.
Did I share my screen?
No, I'm sharing. It's okay.
Hello.
Pandya, are you able to hear us?
Yes. Did I share my screen and explain?
No. Do you want to do it now?
Did I share my screen?
No, this is my screen. Your screen is not there, Pandya. Okay. So, Pandya again, are you there? Okay, by the time he comes back. Assets and liabilities, you can put all your assets, what's the acquired value, current value, and and what are the expenses towards that, and what is the income coming from that, and what are the liabilities and how much you are paying for that. So this is also very simple exercise. You do it once. After that, you can update or review and update once in a quarter. Then cash flow statement is another important statement, which talks about how much actual cash you are getting, how much you are spending. So what happens is sometimes, particularly this is more relevant for the corporates, where there is no real money comes. Let's say you sell something, you may not get the money immediately. Even for us, it is true. You have money in terms of your asset. Let's say, for example, illiquid asset like real estate. You have money in the real estate, but unless it is sold out, you don't have money. It may take its own time. It may take 1 year to get it sold. But within that 1 year, if you need money for your expenses, then you need to see how to plan for that. So the cash flow statement gives you that insight that how much cash you need to spend and how much cash you are actually getting it, and what is the difference between them. How do you manage that liquid cash? So that's the purpose of cash flow statement. So these three statements are very, very important. The cash flow statement, you can it is not immediately required. You can look at it later on. But the first two statements, income and expense, asset and liability, is basic essential. You should do it now. I really suggest that make use of this week and do both income and expense and asset and liability statements for yourself. And I'll be more than happy to review and help you out. So with that, we are coming to the closure of this presentation. So any questions, any suggestions, any clarifications? Let's do that.
Thank you, sir. Very good information. Yeah, thank you. Very good information we got.
Right. Thank you. Now that you have the information and knowledge, now you can implement it.
Thank you, sir. Yeah.
Yeah. Yes, Rukmini, you should start working on this. Put it in Excel. It doesn't take much time. You do once. Initial time it takes time. After that, it becomes very simpler. Month on month, you can just update it easily.
One thing is, did I share my app? This everyone is useful. Did I share my screen?
Yes.
I don't know.
Yes. Yeah. They have seen your app. Yes. So you can use either the app or the XLS or both. You can use both also if you want.
The Excel sheet we can use, but what is my personal thing is, if you are very good in system, you can do Excel. No, I am not good in system and all, and it is taking time. So app is very easy. It's functionable and it is very easy to handle. UI and all, it's very easy. If you practice within 1 or 2 days, you will learn how to handle that. But Excel sheet, you need a little more knowledge about some things, how to form a structure, adding and all. But that is also, it's easy, but it takes some time. But app is comparatively easy than using system. This is my thank you.
Yeah, that's right. That flexibility is there. You can experiment both and see what suits you, and then continue with that. Right. If there are no questions, then we can conclude, Pandya.
Okay. Thank you so much, sir. And thank you so much for your timing. And thank you so much for everyone. I think this particular week, you learn about how to handle money, how to save, and how to do that. Because always everyone know how to speak. Everyone know how to write this thing. But who is winning is who have a proper plan. Who have a proper plan how to write, who have a proper structure. Those are the person who is winning. So everyone, we know how to handle a money, we have a money, but we don't still know, we are confused about the structure. I think this particular session, Rama sir explained you the proper structure. Now we have a proper structure, we can try to use of it. If you use, definitely you will get success. And thank you so much, sir. Thank you so much, and thank you all. We'll see you on the next session, and thank you. Bye-bye.
Thank you.
Thank you.
Thank you, Rama sir. Thank you, everyone. Thank you.